The silver squeeze is nowhere near dead. The price is not justified with the amount of demand.
Physical silver and gold in your hands. Personal service, competitive prices, and zero complaints. That's Miles Franklin. Call us at 1-800-822-8080 or email us at info@milesfranklin.com. Hey everyone, this is Elijah K. Johnson with the Miles Franklin Market Update. And back with us today is our president, Andy Schectman. Andy, thank you so much for joining us today.
Well, good to join you too, Elijah. Happy Friday.
Yeah, definitely. Happy Friday. And the first topic I'd like to discuss is kind of what we're seeing on the spot price of silver. We're seeing it dip below $25 a couple times this week. What is your perspective on what's driving the spot price lower?
Price is a tool of misdirection, I guess, is the greatest explanation that I can give to you, where price and fundamentals and demand have decoupled. There is far greater demand globally, not just on the retail side here, but all the way up to the food chain, all the way up to 1,000-ounce bars and into the COMEX. There is greater demand than there is, in my opinion, that the price, greater demand than the price would indicate. And much like you see a stock market that has decoupled from Main Street, here you have a very large tail wagging the dog. And same thing is true here with what's going on with the price of silver. It has been managed down, which is only making, in my opinion, demand for physical product stronger. So, no, it should not be anything that gets people upset. In fact, quite to the contrary. With fundamentals increasing by the day, it should only reinforce people's resolve, and it should be viewed as a subsidy rather than a deterrent. And I don't think that anything has changed whatsoever. In fact, I'm adamant about the fact nothing has changed whatsoever to really justify a price that has fallen the way that it has. So. The fact that it is down is nothing other than a gift for those that are continuing to add to their position.
You were recently interviewed on Arcadia Economics with our friend Chris Marcus, and you were talking about how really the real price of silver, in your mind, is closer to the 1 ounce round. I mean, you're talking about how we're seeing this disconnect between the spot price and the price for the actual physical metal. So why do you think the 1 ounce round is kind of a better indicator of the real price of silver? And what is that price right now?
Well, it always has been. I guess it's usually the least expensive way to buy a 1 ounce piece of silver. And, all premiums are higher. Shockingly, the 1 ounce round for most of my career would have been between 69 cents over the price of silver quoted and 99 cents over. Somewhere in that range. Now we're closer to $4.69 over, as high as $5 over for some of the more premium rounds. So, if that's your least expensive way to accumulate a 1 ounce piece of silver, then isn't that really a more accurate reflection of what the real price of silver is? And I mean, to me, it is. Everything else is more expensive in terms of 1 ounce pieces. And, it's here again, you have a price that is quoted on COMEX, but it's nearly impossible to find anything even remotely close to that. And, even a 1,000-ounce silver bar, if you could find one readily, would be about $1.50 over the price of silver. But in order to find anything 1 ounce or even 10 ounce, you're well north of $4.50 into the $5 range on anything. And getting those items, even as a wholesaler, is becoming more challenging by the day. So I don't see any signs of this waning, and quite to the contrary. This has been going on now for the better part of 14 months. And while there has been some variance in the price of items that, all these 1 ounce items that have high premiums, we're pretty much going on 14 months of premiums well north of $4 on 1 ounce rounds, and here we are again creeping up closer to $5. So for me, in order to get anything 1 ounce, if you want to call what silver really costs, you're paying almost $5 an ounce over the price of silver to get that.
I think one of the things you mentioned is really how, there's been incredible demand recently for the last 14 months. But there's also, since the SilverSqueeze started in late January, early February, we've experienced a whole lot of demand. February was the busiest month in Miles Franklin's business. And some people are saying, well, this was a failed squeeze. They're looking at the spot price, right? And, it's down $5 from where it hit at the beginning of the squeeze. And the other perspective, though, is, wait a second, there are still issues when trying to obtain physical metal. So how can the SilverSqueeze be over if there's still supply issues?
Because the ability, it isn't. And here again, price is a tool of misdirection. The availability and the supply issues are growing. The availability issues are increasing. And I'm not just saying that. I mean, look around, call around. Everyone is facing the same problems that we are, or anyone in the industry is I think confronted with their major challenge being continuing to get supply in. And when you realize that for the majority of my career, the price of a silver eagle would have been just over $3 an ounce, maybe $3.39, and you can't find them anywhere in any condition for under $9.50 over. I don't see a squeeze abated. When you see the fact that just about every form of government-issued 1 ounce coin is carrying 2 to 3 week delivery delays, almost every company in America at the highest premiums ever, I don't see a squeeze that's abated. I guess people's focus on the COMEX price and trying to overrun the COMEX market or the commercial banks that are really the backbone of the COMEX, I think is you're looking at the wrong thing. You're expecting too much. And as we've talked about before, overthrowing a hedge fund with a whole bunch of Reddit users and GameStop and AMC is one thing, but trying to overthrow a bullion bank and the COMEX is another. But I will say this, by draining the shelves globally of physical product, and that is beginning to happen. Look all around you, Australia, the United Kingdom, you're hearing about these problems. If you look at what's happening in India and off the Shanghai Gold Exchange, off the LBMA, London Metals Association, we are seeing reports of copious amounts of metal being delivered off the exchanges. We saw that backdooring of SLV. So you are seeing physical silver being delivered and taken possession of. And if it starts at the highest levels, like the LBMA, like the Shanghai Gold Exchange, like the COMEX, like the ETFs, it's going to funnel all the way down, like we're seeing now, into problems at the Royal Mint in the United Kingdom and in Australia with the Perth Mint, all sorts of claims of product not being able to be readily delivered, of their unallocated programs with 4 to 6 month delivery delays in allocation, and all the way down to, the retail side where you're seeing monstrous premiums in coins that come with delivery delays. If we continue on the investment side to take 1 ounce off at a time to the point where there really isn't any, and the mints don't have any, where are the mints going to get the silver to continue to facilitate demand? They're going to have to go to the COMEX. They're going to have to start pulling bars off on very large, very large amounts, where if we empty the shelves first of all of the investable silver, it will spill over into the COMEX. And I just want to, I don't want to beat a dead horse, but I think it's really important to continue to harp on one thing, Elijah. Remember, the beginning of 2020, there was only 0.5% of the public investing in precious metals. Or if we took the investing public's assets and gave it a percentage of metals, you're looking at 0.5% in terms of what is actually held by the public before COVID started. And I would argue we are regressing to the mean which was only 2.5% of the last 40 years. That's a five-fold increase in demand. But what if that number jumps to 10 or 15 or 20? I'm telling you, if we just pull silver off and continue to do what we're doing, it's happening globally. You will see it spill over into the COMEX. But starting at the top and working down is the wrong approach. Starting at the bottom and working 1 ounce at a time off the shelves globally on the retail side will have big ramifications, much more so than I ever would have given it credit for, simply because the sheer number of people who are waking up to this. So the silver squeeze is nowhere near dead. The price is not justified with the amount of demand, and that's intentionally. All the same intentional as it was when, whoever the entity was that dumped 2 years worth of global mine supply at the open in between London close and New York open on February 1st. It is done for effect. Price is a tool of misdirection. And when there's so much global demand, they are trying to misdirect the public with levered futures contracts to keep them off the trail. Stay true to your beliefs, have strong fingertips, trust your gut. Price will work out. I'm very confident of that.
You mentioned how the mints are really struggling with supply. If you could expand on that, that would be great, because I know at the beginning of COVID, there were some restrictions, right, that the mints had. So there was a production issue there, but there was also a huge amount of demand. So you had those two things coming together at the same time, which caused some issues. What are some of the dynamics of the struggles we're seeing at the mints right now?
It's somewhat of a mystery what's going on with the mints. They're very inefficient. And I guess maybe it has something to do with what I was just saying about the number of, or the percentage of demand, or the percentage of silver and gold owned by the public. And, if you use, the old phrase recency bias, the mints have not been able to keep up with demand because we are regressing to a mean average, a 40-year average, that would dictate a doubling or a tripling of demand. And it's been, sort of status quo for the last 7 or 8 years prior to 2020, 2019, 18, 17, 16, 15. You're talking a very small subsection of the public who is investing in metal. And all of a sudden, in 2020, that massively explodes. The physical demand increases exponentially, and for everybody. And the mints just haven't been able to keep up. So it's somewhat concerning. In 31 years, I've never seen the U.S. Mint run into these types of problems the first quarter of the year. The same can be said with the Royal Canadian Mint. You're seeing tons of articles coming out of the Perth Mint running into problems, so much demand that they're unallocated programs when people are asking to have it allocated 4 to 6 months. The mints, I think, are overwhelmed with demand. Here again, demand is not reflective of price right now, or price, rather, is not indicative of demand. So I guess, to me, it's kind of where there's smoke, there's fire. I think that when you see the amount of demand we have right now, with only a very small subsection of the public really aware of what's happening, what happens when there is a greater awareness? And I think we are moving towards that greater awareness. But there's no question about it that the mints in general have had a remarkably difficult time keeping up, not just with silver, but with gold as well. And I think that, that's something to keep an eye on as we move forward into the spring and the summer here. Is, does demand globally continue to accentuate? Does this Reddit phenomena continue to gather steam? And I kind of feel that it is. Elijah, it's not unusual for my entire sales staff to work 18-hour days these days, and 7 days a week. That's so unusual from anything this industry has ever experienced that, everything I see around me tells me that demand is not letting up. What is the problem are the sovereign mints' ability to get product to the public quick enough. They have been really in disarray, and several of them, whether it be the UK or the South African or the Perth or the Austrian, I mean, we're promised large shipments 2 weeks out, and they take 4 weeks. And seeing product that normally would be available without a second thought that is completely and totally unavailable is, it's supporting exactly what I'm saying, that you can't be picky and choosy anymore around product. If you're buying it the way that we are, you have to gobble it up right when it becomes available. Normally that's 2 to 3 months before they expect delivery. You need to pay huge premiums and pay full up front. We just ordered in February 75,000 silver kangaroos for April delivery, mid-April delivery. So we had to pay 3 months out, pay massive premiums, and the highest price that I ever have above melt value ever in my career to secure it. That is what you have to do. The Perth Mint also makes 1-ounce dragon bars that are very popular, and I really like them, and we sold a whole bunch of them last year. When they came available, I asked my head trader to get some, and by the time he called, which was the same day they came available, he was told they were out of stock. That's it, gone. So, the mints are producing, but they can't keep up with demand, not even close. And once they are out of product, now you're going months down the road that if you want to secure it, you need to pay up early and in large amounts, fully paid up, including premium. You can't hedge that premium. And, this is a territory that we've never experienced. 2019, I could have called up any of these mints and within a week had a truck on its way to me, as the product would have been immediately sent across the Atlantic Ocean. Right now, when you do it, it's 3 months out and you cross your fingers that that time frame works. So I don't know what to say about the mints other than that they're very inefficient right now and they are inundated with demand and not able to keep up.
Now, you mentioned the different types of silver that people can invest in, and that's actually one of our viewers' questions, and I think we have time for just one question today, but the question is, in your perspective, what is the best size of silver to invest in, like a half ounce, an ounce, a 10 ounce, or a 100 ounce?
Whether you're playing poker with your friends, driving on a crowded highway, or just living life, you can never have too many exits or too many outs or too many options. And so I think that in this industry, very often there is a threshold of penny wise and pound foolish where you cross it and the savings you get by buying large items is or are not commensurate with the loss of flexibility. Conversely, very often when you go below 1 ounce into half ounce or fractional in all forms of precious metals, not just silver, you'll find that the premium moves against you and you start paying too high of a premium, where that flexibility that you're obtaining is not commensurate with the increase in price. To me, the sweet spot is 1 ounce. You buy 1 ounce items, you'll always have demand, you'll always have liquidity, you'll always have flexibility. So if I were trying to pick the perfect place to be, it's 1 ounce, because you can buy a 100-ounce item, and right now with everything being inflated, certainly in the case of 100-ounce bars, I don't believe that the savings in any way, shape, or form is commensurate with the loss of flexibility. So I personally would focus on 1 ounce, and I don't think you'll ever run into problems having tubes of 1 ounce coins that render you 100 times more flexible than a 100-ounce bar, or even 10 times more than a 10-ounce bar, because the savings doesn't justify the loss of flexibility.
All right. Well, Andy Schectman, we really appreciate you joining us today. If people would like to call us, they can call us at 1-800-822-8080 or email us at info@milesfranklin.com. And a message to our viewers, just please subscribe and hit the bell icon. That is if you enjoy these interviews, if you want to be notified of all the upcoming ones. Andy, once again, thank you so much for your time, and any last thoughts you'd like to add?
Yeah, I have a lot of trite statements. They kind of sound canned and trite, but they're really not meant to be, Elijah. And when I say, trust your gut, and when I say, that you look at price as a tool of misdirection. I really truly mean that, because that is what is used to misdirect and dissuade the public, and that is their primary tool. That being the cartel, that really is controlling the price best they can to not let it run away, because the message that it portrays is trouble for the dollar, and that's the last thing that they want to see, even though it is baked into the cake. So trust your gut. View price that is counterintuitive as a primary tool of misdirection, but use that to your advantage, and use these dips to add to your portfolio in any amount that you can. And I think in the end you'll be glad that you did, because I guess 100%. And if you could take anything away from this brief interview, it is that the demand that we are seeing on the ground and globally in no way, shape, or form is indicative of the price. In fact, it should be way higher. When we are having to go to the lengths that we are to get product, which are so far and above anything we've ever done in 3 decades, and pay so much more, I can simply tell you that whatever is happening in terms of an increased demand and a push to an awakening into accumulating more gold and silver, it's working. And I think it's got the people up at the top a little concerned, and you can see that basis the actions that they are employing to not let it rise. But I don't think it's working. The demand is as strong as it's ever been and growing, and just stick to it. I think before this is all said and done, we will see the price action that we all believe will happen. It's going to be a long road and a tough battle, and the bull's going to try to shake as many people off as possible. And I think that if you just realize that this is, a generational opportunity based upon so many metrics, that when we see these pullbacks, don't get dissuaded. Don't let it ruin your day. Just use it as an opportunity to add a few more ounces at subsidized prices.
All right. Once again, Andy Schectman, thank you so much for your time today, and we'll speak to you next week.
Thanks, Elijah. Have a great rest of your day, buddy.